Hey everybody, Mike Weber here with Keller Williams Realty. Today we're going to talk a little bit about how I see rising mortgage interest rates affecting the multifamily space or multifamily investment property. So as many of you probably know, a few weeks ago, mortgage interest rates hit a 7-year high, hovering right around 5%, generally a little higher if you're purchasing multifamily property. Now, they did fall a week later to more reasonable levels, but I think it's clear that the long-term trend here is that we're going to see increasing mortgage rates going into the future. The Federal Reserve is definitely increasing the federal funds rate, the 10-year Treasury bond rate is also going up, and all of these things filter into what people pay for mortgage rates. Now, if you take a look at how investors value property, one of the measures and metrics that they often use is called the cap rate. And essentially all the cap rate is if you take the net annual income, so net, so after all of the expenses that you typically have on a property, like vacancy, cash reserves for repairs, maintenance that you do, property taxes, so on and so forth. So whatever that net amount is without taking a look at the interest that you're paying, and you divide that by the purchase price of the property, that gives you a cap rate, or essentially a return on investment, a net return on investment based on the purchase price. Now that doesn't include whatever the interest is that you're paying on the loan to finance that property. So traditionally in this area, the minimum down payment for an investment property is around 25%. Well, what we've been seeing over the last couple years, and increasingly so, is that the cap rate that these properties are returning is ranging from say 2% in an A-class area to maybe 4% in a B or a C-class area. And you're probably thinking, if I'm only earning 2% after expenses on the property, and I have to borrow at 5% to get the money to buy the property, how am I going to make any money? Well, you're exactly right, and therein lies the problem. With a typical 25% down payment, you're going to still be negative on a monthly cash flow perspective, which means you're going to have to be in a strong financial position to qualify to be able to absorb that negative, and you're also going to have to be comfortable being in a position where you're losing money for an unknown amount of time on a monthly or an annual basis. And so right now, unless you find an amazing deal or something that's very creative where you can squeeze more money out of the opportunity, what I'm seeing is that in most areas, you really need 35 to 50% down in order to qualify for one of these multifamily properties and at least be break even in terms of cash flow from an annual standpoint. So what does this mean? This means that if interest rates keep going up 1/4%, 0.5%, the amount that you're going to be losing every single month to buy a multifamily property is going to be increasing. Well, we all know that investors are not in the business of losing money, so what has to happen for things to make sense? Well, the only other thing that can happen is that prices begin to fall to make the investment make more sense from a financial standpoint. And so I would suspect as time goes on and the interest rates continue to rise, with the current cap rates that are available in the market, we're going to have to see some sort of adjustment. And I would guess that the adjustment we're going to see is finally some pressure on prices that are going to drive these prices down, so that way they'll make more sense from an investment standpoint. The other thing to consider is that as other opportunities in the economy rise in terms of the return on investment, for instance, the 10-year Treasury bond, you're going to have a lot more investors who make the decision to simply invest in something safe, simple, and secure where they don't have to deal with hassles or management to earn a safe 3, 3.5, 4% return as those rates continue to rise in the market, which is going to take away a lot of demand from people that want to buy these low cap rate properties in the Los Angeles area. So if you have questions about real estate or multifamily investing, I'm definitely here to help. Also, do me a favor and let me know what's happening in your specific area in terms of multifamily investment and what you're seeing out there, because I'm always interested in learning about that. And if you like this video, go ahead and click the like button. If you want to continue receiving great content like this about the local real estate market, go ahead and click subscribe. Thanks so much again for watching. It's Mike Weber with Keller Williams Realty. I'll see you next time.